day all. Ira Epstein of Linn Associates with your agriculture update for this Wednesday, and we're at the 3rd of April, 2019, about 2:40 p.m. Central Daylight Time. Now, the issue, of course, in playing the grains or any of the markets from the short side right now is that the Chinese delegation is in town. Word is that the Trump and Chinese would like to wrap everything up very quickly. I just heard on Fox Business TV that one of the things that the Chinese have said is that they do understand the American point of view on transfer of technology and so on, and that is a breaking point. That is good. Now, it's the enforcement issues, if they understand, and what they want the Chinese, the tariffs to be lifted, and I came out with the opinion and wrote about it in my report yesterday. Do it. Lift them. Then put them back on if the Chinese don't do what they say they're going to do. If it's face saving, doesn't matter if we keep them on, take them off, as long as you have the right to put them back on and you do it very quickly within the agreement that you reached. I'm not telling anyone what to do, but it just makes good sense. We'll see if they head that route. As you can see in the grains, a very mixed picture today. The market that was up a lot yesterday gave back in the soybean market. The dollar index all of a sudden reversing a bit against a number of currencies. That was an interesting part too. So if you take a look now at the weekly area chart of closes, we're up about 14 cents for the week. And as I said yesterday, and I'll continue to say it, if you rally, I wouldn't be surprised that the 903.5 area turns out to be a resistance point, the 18-week moving average of closes. Now in the bounce, you can almost see that you've got a trade top in here, a trade bottom is formed there. And you can see how the swing lines are even telling you that. You've got your low right through here, but the pattern's a higher high, lower low. That's a very hard chart pattern to trade. Where's the market fighting now? Look at the 18-day moving average of closes. It's fighting against that. Now, what could set the market off on a downtrend again would be taking out today's low, because what that would do on the chart is it would put lower highs, lower lows, which you already have in place, under the 18-day average of closes. The trick would be, of course, making sure that you settle under that 18-day average. If we take a look at the Bollinger Bands, I think the support area is right through here, the 884.5 area. It seems the battleground's around 899.25. If all of a sudden there was a trade deal announced and the market decided that that was very bullish, you know, the two resistance points are right up here at 914 and 917.25. In terms of momentum, this is where everything's got divergence on it. Even if you did what I just said, pulling back down, momentum is pointing up. I hate when the two fight each other. So you could end up with that theoretically, or let's assume the market never takes out today's low and just keeps pointing higher. The problem then is that you got a 912 high and this 884 low. At best, the market could lean a little bearish, but it's dangerous whenever you've got two parties to a deal that seem to want to make a deal that's big. In the meal market, the market has stayed over the 18-day average of closes, so the bias stays up. Momentum is grudgingly trying to point higher, but it's certainly not on a pattern like you were over here accompanying this type of rally. Here, too, the pattern is one of a lower low and a higher high. There is no trend just yet, but like soybeans, if this market were to take out the low of today and then close under 309, you could say the market would have, in fact, I would say, then you'd have lower highs, lower lows. But those are the what-ifs. The current chart pattern is neutral. In the soybean oil market, the fact that you lost the embedded reading yesterday and it stayed lost today puts the odds that price and the 18-day average are going to make a run at each other. I'd be wrong in my thoughts if you got under the lows back here in the 28.34 area, but barring that, I think the 29.10 or wherever that 18-day average number has come in, that's where I think the market's going to fight something of a battle, which puts resistance from 29.10 to 29.29. In the corn market, we've gone from an upper Bollinger Band right down to a lower one and sort of stalled out. In between that, you've got lower highs, lower lows, but you've hit downside targets, past tense, obviously, and you're oversold. difficult trade. I think the people in the trade want to get short, but I think they want to do it in that 370 level, not here. In the wheat market, we keep climbing against the odds. You've got higher lows, higher highs. That is bullish. Even if this market took out now 456, the way the pattern is, you've got a higher high, then a lower low. It would not be a downtrend. So I think the bulls will defend their positions in this 460 level. Here's what they have against them. The only thing. Depends where the market is in terms of momentum. You got 68 readings right now. Anything over 70, I think, is overbought. But on a pullback, that number could drop, and that, I think, would enamor the bulls to want to be a bit more aggressive. The sugar market is not trending. It's simply whipping around. Lower low, higher high, into the 100-day average, back under the 18. Momentum turned back down. It's very difficult, and it's not got any follow-through one way or the other. In the coffee market, notice what we did today. We got back over the last high, and we were able to close over the 18-day average of closes. You haven't done that in a long time. The second thing you haven't done, you've turned the momentum up with it sharply. So if the bears want to be on the run, in other words, if the bulls are going to take it, they got to run with it right now, because this would capture a whole group of people under them. The bears have to make their stand and not let this market hurt them right here. I think at the end of the day, the bears lost control of the market. In the cocoa market, higher lows, higher highs, 3 days up in a row over that top Bollinger Band. The odds are starting to favor the market's going to either stall out here and pull back under that Bollinger Band, but continuing to run. While it can happen, I question it. I'm looking to see, do we embed? Embed means both the numbers that make up the momentum slow stochastic indicator stay over 80. They did it on the close today. They were there yesterday. They were not there the day before. So I have a very overbought market. The odds don't favor markets typically embed 3 days and up over the upper Bollinger Band. I think the pros will take notice of that and step back a little bit on the market. In the cotton market, the question is, you're losing the embedded reading. If it stays lost, I'm going to look now for price in the 18-day average to come together right against where the 100-day is too, 76.19 to 13. This is an event, though. If you keep that lost, watch out. I think that you can be surprised with a pullback as price tries to reach that 18-day average. In the cattle market, the trend is down. Lower highs, lower lows, very oversold. If the market can gain the momentum and keep it, and that's the problem, it's oversold, then maybe this combination of 117.40 area comes into play on the Bollinger Band and the 100-day average. You negate the downtrend by taking out the highs right through here of 120.62.5, and that puts you almost right at that 18-day average in a resistance zone. In the feeder cattle market, you have enough oomph to get down to the 100-day average. I think all the pros are looking at that right now. And the market does have a pattern of lower highs, lower lows. So it's bearish, oversold, knocking on the door of a first support zone. In the hog market, when you had lost the embedded reading, you came back for that run at the 18-day average. I don't know if you realize that since then, and I'm coming right back here, when it hit that number, you were down even on that day 50 points. Then you went up 300 points the next day. You've added today another 335 points. So, and you've kept the trend up. So you can see the logic in what I say when these markets momentum and tries to get to the 18-day average or the closest of the key moving averages. I teach all that in my charting course, by the way, and it's all video and you can learn a lot from it. I also write about a lot of this in my research. Now, what my research consists of, if you've never tried it, it does consist in my morning videos. My twice daily reports come out. You get also with my research, you can hear my audio recording, because I do call on a phone and tell people, here's what I'm seeing, where's everything going. The subscriber video, as you know, I think is one of the best tools out there to get you going in the morning. I started today recording one at 5:30 in the morning, stopped because I have a few more things to do to get it the same as my quality in my studio here, but I'll be there just around the corner. Could be tomorrow or the day after, so I'm getting ready. And I even on my research might start adding 1 or 2 nightly recordings, all included in what I'm doing. Have no intent at this point of charging extra for that in any manner. So how do you get this? Well, if you haven't tried it, and that's the key, I'm not going to keep giving free trials to the same people. If you haven't tried it, give us a call. You can go to our website, and when you're there, by the way, look at our other products. Remember, tomorrow we're having our live webinar. That comes on at 12:30 p.m. Central Daylight Time. I hope to see you all there. In the meantime, I'm Ira Epstein. You have a good trade day.